Good morning, you're watching Businessworld Live. I'm Dani Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day Thursday. Just 3 months before he finishes his term, President Duterte signs a comprehensive plan for the economy's recovery from the pandemic.
The Monetary Board will hold its second policy meeting for 2022 later today. The IMF says the central bank may have to take another look at its accommodative stance, while Moody's Analytics expects rates to be retained at record lows.
The Finance Department says BPO firms can continue with their remote work arrangements, but at the expense of their tax incentives. PEZA says they're now pinning their hopes on the next administration to make hybrid work permanent for BPO employees.
We begin our broadcast with President Duterte signing a comprehensive plan to fast-track the economy's recovery from the COVID-19 pandemic.
The blueprint contains 10 points, and this includes the strengthening of healthcare capacity as well as ramping up the nationwide vaccination program. Executive Order number 166 also emphasized the further reopening of the economy, the expansion of public transport capacity, and resumption of face-to-face learning. The 10-point policy agenda also seeks to streamline requirements for domestic travel and further loosen requirements for international travel, such as providing quarantine exemptions for vaccinated foreign tourists. The government will also prioritize the passage of laws to accelerate digital transformation and to allow the efficient rollout of emergency programs during a pandemic.
The order also said the government will shift the focus of decision-making and reporting to what it describes as empowering metrics, such as the total number of severe and critical COVID-19 infections, fatality ration, and total vaccinations. The government will also develop a comprehensive pandemic response framework to ensure that the Philippines will be able to handle future pandemics.
The International Monetary Fund says the Bangko Sentral may have to reassess its loose monetary policy earlier than planned. That's on the back of inflation concerns. The IMF says that although there's still some policy space to absorb price increases, inflation is now in the middle of BSP's target range. With this, the multilateral lender says the accommodative monetary policy may need to be adjusted earlier than expected. A poll held by Businessworld last week showed 15 of 17 analysts expect the Monetary Board to retain its record low policy rates today. This in line with signals from the central bank that it will remain patient in supporting growth. Moody's Analytics also expects the BSP to retain its policy rates this month, citing the easing of inflation to 3% in January. But they also believe that policy normalization could start soon, citing strong economic performance in parts of the Asia-Pacific. But how soon is soon? Let's ask Moody's Analytics Chief Economist for Asia-Pacific, Stephen Cochrane. Stephen, thank you for joining us today.
Good morning.
All right. Again, wide expectation is that, of course, a BSP is going to keep rates steady for the session today. But again, like what we reported earlier, you're expecting the BSP to remain accommodative, but you also said there would be policy normalization soon. How soon is that? When can we expect that to happen? And is there now pressure for the BSP to move in step with other central banks?
It's probably the biggest question in terms of the economy right now. The economy is doing quite well, and that combined with the lower inflation, I think does allow the BSP to continue its accommodative stance for a bit longer. The real key is inflation. As you mentioned, inflation is down from where it was in January, but it's bound to rise again given the rise in global commodity prices, fuel prices in particular. There's a good chance that the easing of inflation on food prices could reverse itself, given that fertilizer prices may increase given higher import costs, and again, the impact of higher fuel prices on agricultural production and such. So I think the BSP will sit tight at its current meeting, but I had thought that they would likely want to wait until maybe getting into the third quarter. Now it probably will be before the third quarter, again, if inflation picks up as we expect. One other factor, too, is that the BSP will be looking over its shoulder at what the Federal Reserve is doing. If the Federal Reserve accelerates its path towards higher interest rates, it could force central banks all around the region perhaps to begin moving a little faster to keep the differences in interest rates rather modest going forward.
Okay, let's talk about inflation, which you mentioned is likely to go up due to the oil prices. Today we were seeing it above 120 a barrel yet again. Tell us, at what point does this get reflected, and do you have any sort of indication whether this is a temporary spike that we'll be seeing, and whether the worst might be over in terms of commodity prices? Is there some sort of view that Moody's Analytics has here on how long this commodities price spike is going to stay?
There's a lot of uncertainty in terms of the increase in commodity prices. And of course, a lot of that uncertainty has to do with the flow of energy out of Russia to the global markets, particularly to the European markets, but it has an impact on global prices as well. And so, of course, we don't know what the outcome of the conflict in Ukraine will be, how long it will take. What we are projecting in terms of assumptions in our forecast is that perhaps by the middle of the year, there may be some agreement, some settling of the conflict, and then some assurance that fuel will continue, and energy commodities, both gas and crude oil, will continue to flow from Russia to the global markets. But that's a big uncertainty. If the conflict lasts longer than that, then we could have to live with higher fuel prices for some time, at least until crude oil production could be accelerated out of the United States, for example, as more investment flows into the fracking fields in the U.S. and the U.S. can export more fuel, or as Middle East producers slowly ramp up their production. Right now, the Middle East is, the OPEC members are not changing their stance on a gradual increase of production. There's no acceleration plan right now for production coming out of the Middle East. So a lot of uncertainty, and that's why we see a lot of volatility in terms of crude oil prices right now. You mentioned the jump yesterday in terms of crude oil, and it has been up and down, kind of moving with the news of the day.
Okay, Stephen, how many months of inflation in the Philippines above the target range of 2 to 4% can we keep or tolerate until we need to start tightening?
Actually, I don't think it'll take long. I think if the inflation rate goes above the target rate, given what we're seeing in global economic conditions, global commodity markets, the BSP may very well begin to tighten. It has to, in a sense, anyway. Interest rates are relatively low, very accommodative, and from the point of view of the basic economy, things are much better right now. The fourth quarter was very strong for the economy. Indicators coming out of the economy in January, February have been fairly good. And then this new 10-point program that was signed yesterday is very good news in terms of producing some additional capacity for the economy to move going forward. So I think it would not take long if inflation exceeds the target rate, that the BSP would begin to move and normalize interest rates.
But Steve, also you have here the local currency at 2-year lows now. How is this further complicating the situation?
Yeah, the peso has edged down over the last couple of weeks. That does, in a sense, it complicates things. Although it's one thing that the central bank will be keeping its eye on. One thing that could actually cause the peso to deteriorate further is if, for example, the U.S. Fed starts accelerating interest rates very, very quickly. Interest rates rise in the U.S. We begin to see some capital flows perhaps out of the Philippines and other emerging market countries towards the U.S. that could actually cause some further deterioration of the peso. So, one factor that the BSP will take into mind was whether whether beginning to normalize interest rates would help actually to stabilize the peso or not.
Okay, do you have a revised GDP forecast because of all of these issues that we are seeing? And in addition to that, the impending change in administration, is that going to have an impact on the recovery that we're seeing for 2022?
So our forecast for this year is up a little bit. Right now, we're looking at 6.4% GDP growth for this year. Last month or two, we were looking at something closer to 6.2, so a modest uptick. Again, a lot of that has to do with the fact that it finally looks like the economy is sort of standing on both feet again, as we've seen some pretty good economic data come out over the last 3 or 4 or 5 months. The other factors are that the household debt service burden in the Philippines is fairly modest, so that with the opening up of the economy, consumer spending should improve. That should help drive the economy. And hopefully, it looks like tourism may begin to open up a little bit as travel restrictions in and out of the country will be eased, and that will help as well. So that looks quite good for the Philippines.
Now, speaking of those things, Steve, you have, of course, the government also just very recently, the president signing an executive order for the further reopening of the economy. Not only that, amendments to the Public Service Act also given the go signal by the president here. How much of a boost are we expecting from here?
I think this is important. We probably won't see an initial boost in terms of the pace of economic growth. I think one of the most important parts of it is the expansion and improvement of the public health service. This is critical. I've seen that around the world where the capacity of the public health system has improved. That's where there has been an ability to keep the severity of economic lockdowns very, very limited as waves of COVID have passed through, and it's been a difficulty in the Philippines. There will likely be other waves of COVID coming through, and so the one important factor in terms of keeping the economy going is having that capacity in the public health system to accommodate illnesses, to accommodate those who need isolation or need care. And the more that the Philippines can provide that, the more than that the economic lockdowns will not have to be put in place so much, which means we can begin looking through these waves of COVID in terms of economic growth, that the economy should continue to function more close to normal.
All right, thank you so much for those insights. That was, of course, Stephen Cochrane, Chief Economist for Asia Pacific over at Moody's Analytics.
Now, coming right up after the break, global crude prices climb back to $120 per barrel.
We'll check how markets are reacting to that movement when Businessworld Live returns. Stay with us.
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
Dan, all eyes on what the Bangko Sentral will do today. This as oil is now hovering at the 120s a barrel. What's the market sentiment?
Grabe, Jess, I mean, we did talk about this with Stephen Cochrane earlier on. You know, just when we thought it was already dipping, take a look at this. It's a V-shaped and we're all back to those highs that we were seeing just a few weeks ago. And this, of course, happens as, you know, the U.S. is readying more sanctions over in Russia. As soon as Thursday, they have determined that Russian troops have committed war crimes against the Ukraine. And another thing that has been extending a rally is gold here. Investors are now seeking safe havens. And this, of course, comes, as you mentioned, that the Bangko Sentral is expected to leave its key rate unchanged today. 23 analysts surveyed by Bloomberg, all of them see it as keeping at a 2% record low. And of course, we also have the governor himself saying recently that they will be sticking to their plan to raise the rates only in the second half of the year. Let's take a quick peek at our currency here, the peso. Again, weakening a touch. We're going closer and closer to the 53 levels. We haven't broken through that as of yet, but nevertheless still hovering above 52.40 to the greenback. This according to Divya Devesh over at Standard Chartered Bank. The peso continues to face significant headwinds, not just from the rising treasury yields over the U.S., but also higher commodity prices. Jess, let's take a look at how our index is trading this morning. I'm pulling out the 3-day chart for you, and you can see that also on the right side, so you can see how sideways trading really occurs. Diba? Halos walang nangyayari. We're at least above 7,000 levels, but nevertheless just up by 0.05%. So again, really very tight range here. And finally, just a quick peek on one very oil-sensitive sector, that is the airline industry. Cebu Pacific is actually up by 1.8%. This, as they reported yesterday, a net loss for the full year 2021 of 24.9 billion pesos. I mean, this was also in a way expected. They had already reported losses for the first 9 months of the year. They did mention that 2021 revenues were down 30% compared to 2020, 50% drop in passenger revenue. The only good part is cargo operations actually rose by 20% with record sales, and they are expecting recovery to pre-pandemic capacity hopefully by the second quarter of this year.
The Finance Department says IT and BPO firms may continue their remote work setup, but they have to give up their tax incentives. Finance Secretary Sonny Dominguez explained that extending the work-from-home concession would be unfair to companies outside ecozones that pay regular taxes. Recall that last August, the FIRB allowed IT BPO firms to perform 90% of their operations remotely while remaining eligible for incentives. This resolution is expiring by the end of this month.
Meanwhile, PEZA is retreating in its fight to have work-from-home arrangements extended for BPO employees. PEZA Director General Charito Plaza said they are instead pinning their hopes on the next administration to make the proposed hybrid work arrangements permanent. That's despite renewed pleas from IT BPM workers who are worried about the rising transport costs amid the soaring oil prices.
The SEC has approved the IPO of Asia Pacific Medical Center Bacolod. APMC Bacolod will be offering common shares worth up to 1 billion pesos. That's 3,600 blocks composed of 10 shares each, ranging from 250,000 pesos to 400,000 pesos per block. Net proceeds from the offering will be used for the building and construction, loan payment, working capital, and other expenses related to the 2.6 billion medical facility in Bacolod.
And another company is also eyeing to go public, at least in the next 5 years, and that is Globe Telecom subsidiary Asticom Technology. The shared services company says their planned IPO is part of their growth strategy in order for them to continue growing their portfolio of services. The Asticom Group is also eyeing to launch a staffing and platform company soon, which it says will revolutionize the staffing solution industry. The group announced in January that it reached 2 billion pesos in revenues. That's as of the fourth quarter of last year. Now, President Duterte has ordered to increase the monthly cash subsidies to the poor households to 500 pesos from the initial amount of 200 pesos. But here's the catch. The government says that instead of an entire year, they may only be able to provide that aid for 3 months. Here's the report.
While the bump up of the monthly ayuda for the poorest of the poor from 200 pesos to 500 pesos is a welcome development to offset fuel expenses, the Budget Department says they have only secured a limited month's worth of budget so far.
Para dun sa 3 months, ine-estimate namin na mga 20 billion pesos ang requirement, no, para sa 3 buwan.
An estimated 13 million Filipinos are expected to benefit from it, according to Acting Budget Secretary Tina Canda. The funds will come from the government's excess revenue sources.
Excess revenues lang ang inaasahan natin dito. Yung mga regular natin mga collection, para din sa mga ongoing na proyekto, mga existing na programa ng gobyerno.
Recall that the Finance Department initially recommended a 200 peso cash aid per month for 1 year. But the President himself says this is clearly not enough. The Social Welfare Department says that they are just waiting for guidelines from the Office of the President, especially on the downloading of funds from the DBM. Beneficiaries from the 4-piece program are seen as one of the beneficiary groups for this ayuda as well.
So kung ganun po, tinitignan na po namin kung ilan na po ba yung aming mga 4-piece beneficiaries, ang cash card holders, so that we could immediately download yung pong ayuda o yung financial assistance through that platform.
As of February 28, 4.2 million people are active beneficiaries of 4Ps. Based on DBM's estimates, distribution of the amended subsidy may start next month. For News 5, Paul Samarita, We Are One News.
Meanwhile, prices of basic goods like flour have begun to increase. Retailers warn that rice prices might also climb soon, but the government is convinced that the impact of higher transportation costs and commodity prices is minimal. Shaila Francisco with the story.
From 2 packs before, Camila only managed to buy a pack of assorted bread products in Mega Q Mart for her store. Prices of bread and other sweets have increased by up to 3 pesos. This was pushed by higher prices from suppliers due to increased transportation costs.
Binabalance lang din. Noon, ang dami kong binibili. Ngayon, medyo bumaba.
In Mega Q Mart, prices of flour have increased by up to 5 pesos per kilo. From 38 to 40 pesos last February, it has gone up to 42 to 45 pesos this month. Retailers of bread products expect further increase in prices until April.
Di po natin kayang saluhin, gawa ng halos kami nga hirap din. Sa amin lang talagang tabla-tabla lang makakuha lang kami ng pangrenta sa pwesto, saka pangkain lang. Saka pang sahod. Wala. Napakahina. Mahina talaga gawa ng walang mga pera mga tao.
Consumers should also brace for a possible increase in rice prices. Retailers said suppliers have hiked prices already by 50 pesos per sack. Although retailers are absorbing the increase for now, they said they don't know how long they can hold.
Pagka tumaas pa yon, mga 100 na, magtataas na rin kami. Mabigat na rin yun kasi imbis na tutubuin na namin yun, nadagdag pa sa puhunan. Tapos matumal.
Both the Trade and the Agriculture Departments noted that the impact of higher transport costs on these products should be minimal. Instead, they see higher production costs pushing prices up. Shaila Francisco, We Are One News.
All right, and Spanish bread at 18 pesos. That used to be 5 pesos a piece.
Magpapagas ka na ba today, Jess? The bilihin is very expensive. All right, well,
we still have a few days for that. And that's a first look into the business day this Thursday, March 24, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines, and also vote wisely. We are One News.